Hello and welcome to this masterclass discussion on trade finance and cash management, brought to you by The Banker magazine from our studios in London. My name is Michael Imeson and I'm a contributing editor of The Banker. Here to talk about trade finance and cash management trends for financial institutions are Marcus Sehr and Daniel Schmand, who both work for the Global Transaction Banking Division of Deutsche Bank. Now, gentlemen, our discussion today is centering on trade finance and cash management for financial institutions and the needs of the financial institutions and how global transaction banks like Deutsche can help them. But before we go into the conversation, I'd just like for you to clarify the different areas of responsibility that you have within GTB, Global Transaction Banking. Now, Marcus, you're Global Head of Cash Management Financial Institutions Product, and Daniel, you're Head of Trade Finance and Cash Management for Corporates, EMEA. So first of all, to put this in context, can you both of you please explain exactly what your jobs entail? And first of all, Marcus.
Thank you, Michael. First of all, it's a great pleasure for Daniel and myself being here today with you in London. So what is CashFi responsible for? We are looking at the strategy, at the P&L, at client solutions and at global customer service for our CashFi franchise. So we are offering clearing services to 3,000 FIs around the world, and these FIs include commercial banks, central banks, broker-dealer and asset managers.
Okay, and Daniel?
Yeah, thank you. Also a great pleasure to be here. My responsibility is taking care of cash management corporates and trade finance for the EMEA region. So we are dealing with our chosen target clients on the corporate side, and for the trade finance side also all FIs. Secondly, I'm responsible for trade finance on a global basis, so I'm coordinating our efforts regarding strategy, product development, and what are the latest developments. In that respect, I'm also part of the ICC and BAF-DIFSA, and as said, great pleasure to be here.
Okay, understood. Thanks very much for those explanations. On to the discussion. What are the main global macroeconomic trends and market trends that are affecting financial institutions today? Marcus, perhaps if you could answer that question first.
I think there are three things we have to look at. First of all, there's a lot of uncertainty in the market since 2008, and uncertainty is never good for growth. The second thing is we are seeing a shift in trade pattern, and there are different flavors to it. First of all, in the past, the trade was dominated by the West. Now we are seeing a shift more to the emerging markets. In particular, this is Asia, but also Latin America and Africa are getting more and more important for the world trade. If you look at Asia, you see that there's a lot more trade intra-Asia than it has been before, and also a shift in the demand. So with the growing middle class, for example, in China, you no longer have just China to be an exporting country, but you also see the Chinese importing consumer and luxury goods. And this changes the trade dynamics around the world. Another important thing is the global supply chain, which is going to change and which is getting more and more granular, and this requires more transaction banking services, may it be trade or may it be cash. And I will give you three examples for that. Because I want to stay healthy, I run a lot, I eat fish, and because I'm a German, I must be interested in cars. So for the fish is probably fished in the North Sea, but it's manufactured in North Africa and then resent to Europe. Shoes, my running shoes, are designed in Europe, manufactured in Asia, resent to Europe, and then sold in the shops in Europe. All this requires more and more transaction banking services on the cash or on the trade side. But also with the third example, on the car side, when I compare the car I'm driving today to the car I had when I came from university, there are much more features and functionalities, but these parts are not all built by the car manufacturer himself. They are built by many, many suppliers. And so the supply chain is getting deeper and deeper, which again involves more transaction banking services on the cash and on the trade side.
Yeah, I see. Good examples there. And Daniel, global macroeconomic trends, market trends from your perspective.
Yeah, sure. Let me just add to what Marcus has said. Also on the trade finance side, the true growth engine are emerging markets, and here in particular Asia. But having said that, also Americas is still robust and stable, and we see good pockets of growth in LATAM and the Middle East. But let me share with you what do we mean by trade finance? Trade finance is all about mitigating risk. And what risks do we mitigate? We, from a macroeconomic perspective, have to divide the world into two parts. That's the emerging markets, where we see fast growth, a bit of uncertainty and unknown territory for exporters and importers. Secondly, and I'm going here more to the developed markets, where we have a crisis, like in parts of Europe. That's also where you then can use risk mitigating tools. Let me just share with you one example. Let's take for the Middle East. The Middle East is, some parts are relatively rich of natural resources. That natural resources need to be financed, to be explored. With that money, you invest into infrastructure, which then lead to wealth creation. And all of that can be supported by trade finance tools. Again, and let's be very honest, a little bit of a crisis is good for trade finance, and that's what we see, as I said earlier, in Europe, because again, here you can use risk mitigating products and instruments.
Well, it's interesting you say that about financial institutions in the developed countries, like I suppose the Eurozone, needing your trade finance services. Can you explain more precisely what those needs would be and how they can be met?
Yeah, again, I'd like to use here an example, but let me start with, I think, especially in the developed markets, and as, again, parts of Europe, banks need to be more innovative and need to deal with the new situation. And I'll just give you the example of an export from Spain to the Middle East, here Saudi Arabia, a high-speed train between the two holy cities of Mecca and Medina. So we are sitting as Deutsche Bank as well on the importer side, a Saudi government-owned entity, as well on the exporter, which is a Spanish-led consortium. And as this is a very, very large transactions, we had to front numerous of Spanish as well as other European banks to support that transaction.
I see. And Marcus, anything you want to add to elaborate on that point?
Yeah, maybe to add on what Daniel just said, it's important that we can react flexible to the demands of our clients, but while being flexible and continuing to offering them the solutions which help them, it's also important to not losing sight of the long-term developments in order to future-proof the business. And this is where we bring a lot of things to the table for our clients. So for example, they could leverage our scale, they could leverage our investment, and they could also leverage the standing of Deutsche Bank in order to grow internationally. And this is what we always are committed to provide to our clients.
Well, you've covered the economic challenges and the market challenges. What kind of trade finance products, if we could get down to the detail now, are in demand to mitigate all of these risks?
Let me take that question. Beside the very traditional trade flow instruments like letters of credits and guarantees, we see an increasing demand on open account solutions. And here we basically have three, even fourfold. Firstly, account receivables, and I refer here to invoice discounting or factoring. Then we have the space of accounts payables, which is also known as supply chain finance, and also now under the bank payment obligations ruled by the ICC, where we have the international standards. And we also see an increasing trend of using PRI, private risk insured covered product packages to support global trade flows.
Now, risk mitigation in the current economic circumstances is what you've just been talking about, but what are your forecasts, Deutsche Bank's forecasts for the global economy and international trade in the longer term, Marcus?
I think there's several factors we have to consider. One is clearly adding to what we said before is the growing importance of the Asian market and the emerging markets as a whole. And interestingly, growth is coming in more and more from the emerging markets. So more than 2/3, according to our research unit, DB Research, is coming from Asia in these days. And interestingly, around about 39% of this is coming from China. So this is where the growth engine sits. And we are very bullish for these markets also in the future. So for the Eurozone, the forecast is not that optimistic. For the Eurozone, we are predicting a growth of minus 0.3%, and this is expected to stay for some time.
Okay, and Daniel, what's your take on this?
Yeah, let me throw in a few more figures which come from our research unit. So global GDP is around 3%. And again, also adding to what Marcus says, developed markets are around 1%. Thereof, interesting enough, US is around 2%. So let's go to the emerging markets where we see or predict a growth of 5.4%. Thereof, Asia 6.7%, and again, China a true growth engine. So if you take those figures, 80% of that GDP growth comes from emerging markets, thereof at around 60% out of Asia, and thereof 40% from China. Let's go a bit to the trade numbers or the trade growth. So trade growth is expected to grow at double the speed of GDP growth. And then again, the driving force here is the emerging markets. And I think it's very prominent. You read and hear about that a lot. The South-South trend or the intra-Asia developments. And that is something where also we, with our products and our global footprint, can support our clients.
Well, a lot of trends happening in the global economy and international trade. How will all of these trends in the economy and international trade affect transaction banking, global transaction banking? Will they have a negative effect, a positive effect, or no effect?
We believe that there's a positive effect, and there's also a figure supporting this. So Boston Consulting Group had estimated that the global trade is growing by 440% between 2011 and 2020. And so this means also with the effects we described earlier with the supply chain and everything, that the need for transaction banking, and with that also the pie for transaction banking revenues, is growing.